Danielle Park of Venable Park Investment Counsel spoke to a packed crowd at the Vancouver Cambridge House show today. And her main message, well, if we should be paying attention to one thing in the world right now, it's the US dollar.
The way I like to describe it is the teeter-totter analogy for people because they can follow that. Because the world stock and commodity markets are priced in the US dollar. It's a benchmark currency. It's the most relevant sort of force on planet Earth right now with respect to trends and valuations and things that happen, the way money moves around the world. So when it is being pushed down on one end, everything else tends to elevate in price, and we've seen this correlation now for the last 10 years. And so what happens is when it comes into a corrective phase where it rebounds, everything else tends to sell off. And the last two times that's happened, when the US dollar has staged a rally of some kind, you've seen anywhere from 50 to 70% losses in some of the other assets. So even though people are very negative about the US dollar, perhaps long term, what I like to remind them is it's more important what happens in the next 6 months and year than a long-term thesis. You may be right, but in the meantime, you may lose half your money in other assets 2 or 3 times, right? So it's the most indicative right now of what's going on.
That's a really good point. And also, QE2 wraps up June 30th. Will you be paying attention to when that wraps up and the impact it will have on the dollar?
Yeah, well, I think the dollar's been rallying in the last little while, so late May and the first bit of June, and it could be anticipating that, there's going to be less liquidity and less devaluing from the U.S. Fed in the near term. I think that could be one of the forces. And also I think that many traders in the world understand this relationship. I don't know if retail investors do, which worries me, which is why I try and tell them. I think a lot of traders realize if the Fed is stopping QE for a while, that you're going to see a sell-off in some of these risk assets that have received much of that liquidity in the last little while.
Now, most of our viewers are interested in knowing about gold. Obviously, gold and US dollar and a very interesting relationship.
Well, I think that gold bullion, certainly, I get the argument about the safe haven, the alternate currency, etc. The problem, I think, is that many people participate in gold via the stock or the commodity markets via paper assets.
Right,
so
ETF.
Yeah, ETFs, and this has been a long-standing idea now. Gold, it's been in a long, more than 10 years, of increases. So people come late to the party and they think that any kind of gold exposure, whether it's paper assets, derivatives, ETFs, indexes, whatever, is going to be some defense. And in the world that I'm describing with the US dollar, it won't probably work very well. It didn't work the last couple of times, right? When the US dollar recovered in 07, 08, you got gold sold off. Not as much as some of the other things, but it still sold off about 25%.
But it's a different story with physical?
Well, physical, it may in fact be selling off in terms of value, but if you're keeping it in your basement, you're not having to look at a statement every month that says your gold in the basement is now worth less than it was. Whereas paper statements that are transacted, you tend to get, a price that you look at all the time. I find people are less tolerant to just holding with a position if they're getting reminded on a daily basis that it's now dropping, and perhaps dropping quite a bit. So I think that people tend to sell in panics more with paper versions than they do with the physical commodity.
Danielle, thank you so much for your comments today.
Thank you.
For Kitco News, I'm Daniela Cambone reporting in Vancouver. You can email me your comments and questions at newsfeedback@kitco.com.